Yeah, it's just a very important, there's always some very important political event, but this is really a very important political event in China. So it has been a key kind of watershed moment for us. And we've been kind of calling that all this year, both in terms of the renminbi, but also at the fundamentals. It's when they can move on the zero COVID policy, when they can move on the getting past this event is when they can start to really address the property market problems in a deeper sense. So after they get through this party congress, we start to see some really important watershed moments coming for China.
What kind of watershed moments, Freya? I mean, it's not a change in leadership, so is it doing more for the economy or actually real changes, long-lasting changes?
Yeah, no, not expecting a change in leadership there, but going into next year, what we are looking for is for them to really start to deal with those problems in the property market. This year, it's been sticking plasters because they can't do any major reforms ahead of this party congress because it's just too risky that the whole thing escalates and they get these renminbi depreciation spirals offsetting the developer dollar debts, and they just can't take the risk that might happen. Whereas next year, they know that at some stage they really have to do something about this, and when they're on the other side of this party congress, then we could start to see them making some more significant moves, such as maybe there's more nationalization of the property market. Maybe there's further realization that the banking sector needs recapitalization, and ultimately, I always kind of come back to what this means for the renminbi and the global investor. Essentially, this means that China has to pump out more liquidity. And we've seen that in a shorter term sense this year, again, in a kind of more sticking plaster approach to things, with the PBOC just pushing out as much liquidity as it can without depreciating the renminbi too far at this stage. But maybe next year we get some greater, when you get the downturn after the reopening in Q2, maybe that's when you start to see the authorities really having to come to terms with the souring debt, the continuation of the souring debt backdrop, and having to recapitalize the banking system more seriously, and that does mean greater liquidity being pushed out by China. It's this kind of next 2 to 3 years. There's always a 2 to 3 year time horizon with China, but there has to be some kind of denouement with debt in China, and after you get through the party congress, it's just much more likely that actually that tail risk materializes.
Freya, thanks so much. Freya Beamish there, head of macro research at TS Lombard, joining us to talk the Fed, inflation, of course, China. Now let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. UBS is to raise its dividend for this year by 10% and says share buybacks will likely exceed $5 billion in 2022. The Zurich-based lender is returning excess capital to investors following the cancellation of its Wealthfront acquisition. Goldman Sachs is embarking on its biggest round of job cuts since the start of the pandemic. Bloomberg has learned it plans to eliminate several hundred roles starting this month. Goldman typically revisits its headcount every year, firing employees based on performance and to match the bank's needs. Shares in Australia's Ramsay Health Care have tumbled by the most on record after a consortium led by KKR indicated it will not improve the terms of its takeover proposal. KKR has been in talks with Ramsay, which operates a network of private hospitals across Australia and Europe since April. HSBC's CFO says rising inflation could force the bank to significantly raise salaries as it eyes what he calls brutal cuts to keep a lid on costs. Ewan Stevenson says HSBC is about $500 million short of its cost target for next year, facing a 6 to 7% rise in underlying costs. Half of HSBC's cost base is fixed pay. That's the Bloomberg Business Flash. Tom, Francine.
OK, Laura, thank you. Coming up, the UK remains in mourning. Thousands of people have queued to pay their respects to the Queen. But while politics is on standby, the economy most certainly is not. More on that next. This is Bloomberg.
ผลลัพธ์เหลือเชื่อมากไม่คิดว่าจุดด่างดำบนใบหน้าจะจางลงได้ค่ะ
L'Oréal Paris Glycolic Bright Serum We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
Not just being a company about traveling, but now a company about living. So there's this whole new category of travel that's not classic 2-3 nights in a city. It's not long-term housing, and it's completely emerged because of the pandemic.
Welcome back to the Open. 22 minutes into your European trading day. Gains of 0.2% across the benchmark here. Futures in the US pointing up by 0.3%. A couple of individual corporate names. Ocado here in the UK being absolutely smashed, as is M&S. Of course, they have a partnership, the two. This is the delivery company, the food delivery company, down around 13% on the back of a miss when it comes to its earnings. Really feeling the squeeze when it comes to the cost of living crisis and cutting back by consumers. You can see aligned with M&S down 4.5%, Ocado down 13%. UBS, this news that they have raised their dividend, they're exceeding the buyback after they failed to close a deal around Wealthfront. That acquisition, of course, being shelved. It means they're raising their dividend by 10%, and they're probably going to exceed their target for share buybacks, the target of $5 billion for this year, getting 1.3% on the back of that news. We touched on Ocado and the concerns around the cost of living crisis. Let's get more broadly to the UK then, remaining in a period of mourning. Of course, thousands have queued overnight to pay their respects to the Queen, whose coffin is at St Giles Cathedral in Edinburgh. And while government business is on hold, the economic news does continue. As we mentioned, data released this week paints a clearer picture of how well the nation has fared, or not fared, amid sky-high inflation and rising rates. For more, we are joined by Bloomberg's Lizzie Burden. Lizzie, talk to us about the UK jobs report, what it tells us about the softness in this economy.
Yeah, so it's come out at 7 a.m. this morning. It's the lowest three-month unemployment rate since 1974, 3.6%. Economists hadn't predicted any change from 3.8%, so that tightness in the labour market really persisting. And the unemployment rate is something that Prime Minister Boris Johnson, before he stood down, showed off about. If you remember, on the steps of Downing Street, he said that it was the lowest since he was on a space hopper. But what this actually means for businesses is it's fanning upward pressure on wages, it's making it more expensive to do business, and it's more difficult to find staff. So in reality, this is not necessarily a good thing. And further out, our economists say that because of the energy bailout, the risk of that overheating the economy, it will mean that the Bank of England actually has to keep rates higher for longer to take some of the steam out of the labour market.
So there are also reports in the press about the Chancellor Kwarteng, first of all saying, look, to Treasury, we want that 2.5% growth, but also the limited scope of actually tax cuts, which have been promised in the campaign.
Indeed, and this emergency mini-budget that we're expecting is separate to the energy bailout. We should point that out. But this is the opportunity to fulfil those promises that Liz Truss made throughout the campaign for tax cuts from day one. The question really is, how much will they boost growth, as Kwasi Kwarteng says he wants to focus on, and what will be the blowback in terms of inflation? And it's difficult to tell because the Office for Budget Responsibility, the official fiscal watchdog, isn't going to have the chance to assess this package. But the mood in the Treasury, the Financial Times is reporting today, is grim because, as we know, one of the first moves that Kwarteng made was to get rid of Tom Scholar, the #1 civil servant in the department, and that could open the floodgates to much more brain drain because because, of course, Treasury civil servants are the most hireable and the most likely to be offered huge salaries in the private sector.
What do we know about how this government's going to approach what has been described as, at least expected, this winter of discontent here in the UK with more strikes?
Yeah, well, the worrying thing is that there could be overlapping strikes at Felixstowe and Liverpool ports, and we already had strikes at Felixstowe. I was there. The reason is that the union is rejecting the pay deal offered by the port bosses, but Felixstowe focuses on Asia trade, whereas Liverpool focuses on transatlantic trade. And it couldn't be worse timing when retailers are gearing up for Christmas. And, you know, the unions are striking because they want to help the workers through this double-digit inflation. The pay deals don't meet it. The worry is they could add to it by striking.
Thank you so much. And King Charles III, we know, will make his first visit to Northern Ireland. Now, coming up, we have plenty more on Ukraine and Russia. This is Bloomberg.
คนละครึ่งมาแล้วที่ฟู้ดแพนด้าส่งฟรีพร้อมรับเงินคืนสูงสุด800 บาทใครใช้คนละครึ่งสั่งฟู้ดแพนด้าเลย
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
They can on a website. On the App Store, the situation is different. There, Apple has search ads. This allows developers to buy their way into showing up higher on search results. For instance, an App Store developer can bid for the term car racing or basketball so their apps would surface above competing apps in the list of results. Apple's push into ads is a little ironic, given that its ATT, or App Tracking Transparency Privacy feature, limits the ability for Meta, Snap, and even smaller developers to generate as much revenue as possible from advertising. That's because the feature allows users to choose if they want their data collected and tracked across third-party apps and websites. Still, Apple's hoping to expand its own ads business and is planning to add search ads to its Maps app. Other areas where ads could eventually appear are in Apple Books and Apple Podcasts, along, maybe one day, with an ad-supported tier of Apple TV Plus to compete with new offerings from Netflix and other streaming video providers. I'm Mark Gurman. This is Power On.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. Power down. The EU moves closer to power rationing and is set to propose a levy on energy company profits. All eyes on today's U.S. CPI print, with a headline number likely to feed optimism. Inflation has peaked. Plus, slimming down. While Goldman and HSBC plan staff cuts amid economic uncertainty, UBS boosts its dividend and buyback. So, Tom, if you look at the markets, they're just expecting that CPI print to tell us that actually we've had peak inflation.
Yeah, they're going to get a shock, a surprise? Is it priced in already? You're looking ahead, of course, to 75 basis points potentially from the Fed next week. The estimate is that when it comes to inflation out of the US, the CPI print is going to come in at about 8.1%. But that certainly is the centrality in terms of the focus for these markets. Getting to 0.3% across the benchmark here, then building onto what looks like you could be getting 4 days of gains if this holds. The DAX currently up 26 points. Here in the UK, the FTSE 100 way down slightly. It's range bound, but you've got retail sector, Ocado and M&S pulling the broader index below what some of the other benchmarks and how some of the other benchmarks are performing on the back of concerns about the pullback from consumers when it comes to retail. Let's switch it on and see how things then are playing out across these sectors. You also had the State Council of China meeting. Premier Li Keqiang again emphasising the need to support the consumer in China as those COVID restrictions just get ever tighter ahead of that party congress in the middle of October. At the top of the list, consumer products currently gaining 0.9%. F&B also in similar territory, but a number of sectors still in the red. Retail, as I said, leading those losses down 1%. Ocado and M&S will be central to the losses that you're seeing in retail this morning. 30 minutes into your trading day this Tuesday. Francine.
Now, it feels like a death in the family. Born in 1926, the year that John Logie Baird gave the first public demonstration of television, and crowned in 1953, the year of Joseph Stalin's death, the Queen has been with us for so long that only a sliver of the population can remember life without her. She has reigned for longer than any other British monarch, easily outstripping her great-great-grandmother, Queen Victoria. Now, acting on the principle that I have to be seen to be believed, she has personally met innumerable people and touched the lives of billions by radio and televisions. Those were the poignant words of Bloomberg opinion columnist Adrian Wooldridge, and to talk, of course, about the Queen, the monarchy, if I can get my words out. Adrian, a lot of people are still very choked up, of course, about what happened last week. We go into the funeral on Monday. What will be King Charles III's modus operandi and also trying to keep the union together?
Well, he has a very difficult job, obviously, because he's succeeding this iconic figure, and he needs to sort of establish a sense of identity. He needs to remove himself from her shadow and establish himself as the new king, which he is, but do it very gently and with a great sense of sort of dignity. Almost, he can't allow himself to be a nothing king, just a shadow of hers, but he has to slowly assert his authority and independent style. He has to, he's a different person. He has a different character, and that has to slowly emerge. But at the moment, it's all about, paying his and our respects to, this extraordinarily long-serving monarch.
Adrian, does it accelerate, do you think, the calls amongst Republicans within those Commonwealth countries? We saw, of course, Barbados moving to a republic. Does that challenge King Charles III in the months and years ahead?
I think that his great theme will be a slimmed-down monarchy. The most important thing will be slimming down the number of royals, people associated with the royal family in this country, and it had become rather bloated under this queen. And I think the external expression of that slimmed down monarchy will be, accepting the fact that many countries want to become independent. So yes, it will hasten that process, but I think a sort of spin can be put on it, whereby this is a sort of a more restrained sort of monarchy. It's adapting to a new world, a world in which some countries want independence and in which the tolerance of the British people for a huge family supported by the state has lessened a bit. So I think it can be turned into a rejuvenation, not necessarily a retreat.
Adrian, in the shorter term, what does it mean for negotiations that the UK has with other parts of the world, either on trade? Is there a goodwill because people loved the Queen and the monarchy so much?
No, I'm afraid that trade negotiations are just very, very hard-headed things which take a great deal of time to reach fruition. And although there is a massive amount of goodwill, and I think it is an extraordinarily reassuring amount of goodwill across the world, in the end, trade negotiations will have their own logic. So the goodwill will not be translated into great series of trade deals or anything like that. Take the United States, which obviously is, very close to Britain, and Joe Biden is rightly coming over for the funeral. Still, I think our trade negotiations with the United States will be grinding on in many years, for many years ahead.
Adrian, just very briefly, the reaction has been slightly more nuanced in countries like Ireland, indeed in countries like Kenya. Is there a need for this new monarch to address the colonial and imperial past of the UK more clearly, more head-on?
Absolutely, and I think Prince Charles is very well equipped to do that. He has a different set of values from his mother. His mother was very much a product of the empire of the 1920s and 30s when she grew up. Prince Charles is a much more woke, if I could use that phrase, a much more woke monarch. He's been one of the leaders of the climate consciousness-raising process which we've had over the last few years, and he's very, very sensitive to accusations of imperialism and colonialism, and talked about moving from defender of the faith to defender of the faiths. So I think he's the right person to be doing this, and has a reverence for tradition, rightly so, but also knows that not everything about the empire was exactly hunky-dory.
Yeah, to say the least. Bloomberg opinion columnist Adrian Waldry, thank you very much indeed. Well worth reading his analysis and his opinion piece, of course, on the terminal and on Bloomberg.com. Let's get the first word news now with Laura Wright. Laura.
Thanks, Tom. The EU is set to propose a mandatory target to cut power use. The move is a step toward rationing energy to help homes and businesses across the continent survive an energy crunch. Other measures include funneling energy company profits to struggling consumers. The EU's executive arm will propose its package this week, though deep divisions remain among member states. Hundreds of New York Times staff are working from home this week in defiance of the company's renewed return to office push. More than 1,200 people have pledged not to return to office in an effort to get the paper to negotiate over its plans. Journalists are also saying many staff have not had a raise for today. The coffin will be taken to Buckingham Palace and then to Westminster Hall, where the Queen will lie in state for 4 days ahead of the funeral on Monday. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Francine.
Thank you so much, Laura. Laura, right here in London. Now, Ukraine is actually appealing for more Western weapons to build on its successes over the weekend in liberating territory from Russian control in the Kharkiv region. Now, Ihor Zokva, advisor to the Ukrainian president, spoke to our very own Maria Tadeo.
The aim of the Ukrainian armed forces, the aim of the Ukrainian president is to liberate all the territory Ukraine is now is not having the control of. In order to do this utmost task for us, in order to get the victory, definitely we need more weaponry, we need more artillery. Artillery matters when starting those kind of campaigns. We need ammunition, necessary ammunition for the Western artillery and for the old Soviet artillery.
Ukraine says hopefully this year can be put to an end to the war. But I wonder, there was a theory for a long time that weapons meant escalation, and that was a bad idea, and that would only anger Vladimir Putin, and that would only be a problem. Would you say that at this stage, everyone who said Ukraine cannot fight back, weapons means escalation, they've been proven wrong?
Absolutely, they were fully and totally mistaken. Yes, we heard some positions even before the war. Let's not provoke the Russian Federation. Let's tame the beast. Let's be very cautious. Look what happened. Russia still started its aggression against Ukraine, and the steel weapon started to go on. But imagine if we had it before, maybe Russia would have thought twice. So now they are talking.
Europe correspondent Maria Tadeo. We are joined by Maria now. Maria, a comprehensive interview, some really fascinating insights then from the advisor. Did he give any more insight into how Ukraine plans to build on these recent successes, these surprise successes that we've seen on the battlefield?
Yeah, and Tom, and to some extent much faster than many anticipated. And I think that was overall the takeaway message from that interview with Ihor Zokva. He works very closely with President Zelensky. He advises him particularly on diplomatic matters. And what he says is that, the Ukrainian army has been professionally trained. They know how to operate NATO weapons and will continue. Of course, he said the liberation, as they call it, operation will continue until they claim everything back. And then, of course, that demand for more weapons. The Ukrainians do believe that some countries in the West, of course, you could believe or argue that this is a reference to Germany, have been way too cautious, that they really believed more weapons could lead to further escalation. But in their eyes, this is the fastest way to end the war, to really push back Russia on the military front. And it's only at that stage that Vladimir Putin will sit around the table. What was also clear to me is that at this point, the diplomatic channels between Ukraine and Russia, they're completely broken. There are no talks going on. This is really now an active battle on the front.
Maria, you also asked about the situation regarding the threats hanging over Ukraine's massive nuclear plants.
And yes, Francine, this is almost a surreal situation, but it is just so dangerous. You have a situation where a nuclear plant is operated by Ukrainian staff, but the people around it that control it are Russian, armed forces. There has been conversations over the past few days. President Zelensky talks to Emmanuel Macron. Macron then goes to Vladimir Putin. Remember, the Ukrainian president and the Russian president do not speak face to face. The idea is to demilitarize the plant, but that is not happening for the time being. But I would just point very quickly to the words of the head of the Atomic Energy Agency, Rafael Grossi, who said, this is a war, but you cannot wage war on a nuclear plant. It is just too reckless, too dangerous.
Maria, thank you so much. Maria Tadeo there with that great interview. And we'll play plenty more, of course, that interview throughout the day. Now, coming up, Barclays pushes back against UK deficit worries. We delve further into the fundamentals of Britain's economy. That's coming up next. And this is Bloomberg.
ผลลัพธ์เหลือเชื่อมากไม่คิดว่าจุดด่างดำบนใบหน้าจะจางลงได้ค่ะ
L'Oréal Paris Glycolic Bright Serum
Astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in the monsoon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Welcome back to The Open, everyone. We're 45 minutes into the European trading day. Really, there's one story in town. It is U.S. CPI. That inflation figure coming up later will give us a clue on what the Fed does next. And for the moment, markets pretty much stable. Now, the U.K. faces a prospect of a bleak winter as consumers and businesses struggle under the weight of soaring inflation and energy bills. Now, Bloomberg Economics sees a risk of the U.K. slipping into a technical recession in the third quarter. Joining us now to discuss all of this is Paul Polman, former Unilever chief executive and chair of the One Young World's Global Advisory Board. So, Paul Polman, thank you so much for joining us. You are really one of the first to put climate change sustainability on the forefront of not only a big company at Unilever, but trying to push it with efforts globally. How will the cost of living crisis impact all of this?
Well, there's no question that it is impacting a lot of people, Francine. We've seen in the last 18 months price increases that have been more, in fact, than the previous 5 years. And food and energy prices are the main reasons for that. But there are a lot of underlying structural issues that need to be solved. Climate change being a key driver, obviously the geopolitical tensions that we see in the world. The pandemic itself hasn't helped. And then the supply chains are really being disrupted in many of the cases. And all of these things are coming together. I don't think we'll see the end of that in the near future. The result of that, over 100 million people back into acute poverty in the world, about 200 million people facing, again, further food insecurity issues. So it is a problematic issue that we all need to pay great attention to, not only to address the short-term pain that it is causing, but also to ensure that we do the right things for the longer term so that we don't aggravate it.
Paul, what is your sense, what is your analysis of the measures, the policies that have been put in place and acted, whether it's here in the UK or indeed on the European continent, to address the cost of living crisis, particularly, of course, when it comes to energy bills? Is it the right mix that you're seeing? What else do you want to be seeing from policymakers?
Well, we're seeing a lot of short-term actions, and be it tax cuts, be it subsidies, be it price freezes. The European government this morning called for reduction in consumption, which obviously is one of the better ways of doing it. But there is no doubt in all of this that green energy is continuing to be more attractive, not only for positioning us for the future, but even today. Often the tariffs are are connected to the price of fossil, and that needs to be deconnected. But in any place in the world, if you have the winds and solars, you'd be cheaper off. So we know what this energy transition needs to be. Short term, we understand that there might be some actions that need to be taken to protect consumers, but it all needs to be done with a longer term perspective, as I mentioned, so that we don't kick the can down the road. So in the UK, for example, the package that is announced, obviously, was the tragic death of our Queen, and we have to have a little bit of a pause, but we need to analyze what is happening there and to be sure that we not only help the people by freezing prices at a reasonable level, but also look at some more structural changes that need to happen. 38% of the world's energy is already green energy, and it's continuing to be the most attractive option for all of us.
But Paul, overall, is that transition going to take longer because of what we're seeing, or will it be accelerated? It's unclear at the moment how much investment will go into it, especially in the UK.
No, absolutely. It is unclear. And also we need to ensure, Francine, that the investments that we make are in the right direction. What business hates, and ultimately most of the money has to come from the private sector, is changes of directions. Fracking, no fracking, nuclear, no nuclear. Are we restarting coal and opening coal mines? Are we not? What we need is a clear direction here. It is very evident to most people that the green transition is well on the way. We have, most countries have made commitments to be in line with the Paris agreements and stay below 1.5 degrees. By all means, still possible. Most businesses are moving. We have now $35 trillion of businesses that have made commitments to decarbonize their value chain. I would argue the financial market is moving as well in bigger numbers than they sometimes get credit for. But we still have a lot of policies that push us in the wrong direction. We still have enough first subsidies that put us in the wrong direction. So now is the moment to rally together. There's no question that it is difficult. The geopolitical situation, the multilateral institutions, the crisis in the Ukraine that you just talked about before, these things are all derailing us to some extent. My argument is really for business to step up, for civil society to step up and help de-risk these governments. It's very difficult, frankly, for governments alone now to do things. As we go into the COP27 in Egypt, we do see some positive signs. We see the Australian government coming in now. There was a government that was outright boycotting climate change. Now they're very aggressively helping. The US has passed this Inflation Reduction Act, which is a very decent piece of legislation beyond expectation. We see India coming in with a further commitment of 1 gigaton, more or less, in carbon reductions. And I think if we see a change in regime in Brazil, then many more cards are lined up, if you want to, and there could be some potential momentum. Where the issue is right now is in the emerging markets. 40 of the emerging markets are probably close to fiscal bankruptcy. We need to give them debt relief. We need to help them with loss and damage. We need to provide them funds to make the energy transitions. And this is where the world is frankly falling short at this moment in time.
And Paul, one country you haven't mentioned is China so far. What do we know about China's commitment as it wrestles with its own economic issues?
Yeah, it's obviously another factor that, Tom, you're right to throw in. The supply chain disruptions, the closing of many cities, one after the other, in their strategy to tackle the COVID crisis. That is not helping. The housing market that is starting to implode, and the economy having a pressure. Having said that, in terms of climate actions and mitigations, the Chinese are leading in many respects. And despite the challenges that they have, I believe that the 20-year plan that they are now putting out there, their 5-year plan, will have some significant climate components in there. Whilst there are no discussions going on at significant levels between the US and China, which is regretful, or an involvement of China in the negotiations, both at the COP15, which is biodiversity, the COP27, which is climate, or even the G20, which is being held in Indonesia this year. I do think that ultimately it's in their interest as well, and they understand that, to tackle the problems. They've had the biggest drought. Agriculture is under pressure there in terms of food security. So work to do there as well.
Paul, we've run out of time, but thank you for those insights on this need for an accelerated transition to renewables. Paul Parliament, Chair of One Young World's Global Advisory Board. Thank you. Coming up, Wall Street looks to be embarking on job cuts in order to meet cost targets. We'll get the details. This is Bloomberg.
Whether it is offering guaranteed income solutions or generating returns on behalf of some of the world's largest pensions, Apollo is driven to help people retire better.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
$1 billion market cap. That's a huge milestone.
This is the largest, fastest wealth creation event in the history of the world. And financial institutions have only now just figured this out.
It is a power to the people kind of technology.
However, we are still tied to the centralized banking system in a way that is unnecessary.
The crypto sector today is largely unregulated.
This is a little bit like the American Wild West.
Essentially what DeFi is, it's like a big casino.
That's scary to the JP Morgans because they're seeing all this growth and they're left out.
You all can do whatever you want and I don't care.
We're seeing a revolution unfold right now. These are historic times.
Buckle your seatbelt. This is where the ride gets really interesting.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays, this is Bloomberg. however you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back. Inflation is forcing banks to tighten their belts. Goldman Sachs is about to embark on its biggest round of job cuts since the start of the pandemic. Meanwhile, HSBC's CFO has said that the bank is currently some $500 million short of its cost targets, forcing the bank to, I quote, brutal cuts. For more, we are joined by Tom Metcalf, Head of Finance for EMEA. How much do we know about the actions planned by HSBC and Goldman Sachs?
Yeah, I mean, HSBC's CFO came out yesterday and talked about these $500 million of cuts, and this is driven, as you said, by inflation. So they're seeing wages go up across this bank, not just investment bankers, it's like the retail bankers in particular. So that's really pushing behind on their cost targets and causing a lot of problems. And then Goldman, as we know, coming out and planning bigger job cuts. And that's probably maybe more linked to the investment banking downturn. So obviously last year, massive revenues. They hired a lot more people, and now those people have not much to do.
So can we expect others actually to do the same?
Yeah, I think you're going to see a similar trend across for retail banks, similar to HSBC, and then for the investment banks, they're going to probably be pretty rigorous on the cuts.
And just very briefly, UBS returning some more capital to shareholders.
Yeah, so that's linked to that Wealthfront acquisition, which got cut. So basically, they're taking that money they were going to spend there and handing it back to shareholders.
Tom Metcalf, thank you very much indeed. Sorry for cutting off, Francine. That is it for us. The end of the European markets open. Surveillance early edition is up next. Thank you. The market's currently up 0.2% across European stocks. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
Is it possible the industry is in an arms race that will lead to spending itself into an oversupply? I mean, that has happened before.
We've looked at this very carefully, and the digitization of everything. Tell me what aspect of your life, Emily, isn't becoming more digital?
Well, I'm trying to prevent that, but yes, I think it's happening.
And COVID has accelerated that. The industry crossed $500 billion last year, the semiconductor industry overall, and estimates are $1 trillion, a doubling by the end of the decade at that point. I believe those estimates. It's not that there's not going to be some blips and turns on the way, and the majority of that is driven by leadership process technology, of which only 3 companies can satisfy that need.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We need more weaponry. We need more artillery. Artillery matters when starting those kind of campaigns. We need ammunition, necessary ammunition for the Western artillery and for the old Soviet artillery.
Any kind of private equity strategy that was based on leverage, right, is going to be challenged. But many of them are based on growth. And companies, especially as you have technology companies, those aren't as reliant, and it's not as risky on the, from the interest rates rising. To globalize our alternatives platforms, Alcentra was a move of taking a U.S. private credit manager and adding European capabilities. So if there were some geographies that made sense for us, we'd be interested there, or specific fintech type of strategies that we thought were interesting from distribution, we may be buyers and things like that.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Power down, the EU moves closer to power rationing and is set to propose a levy on energy company profits. Prices down, stocks extend gains leading into today's US CPI print, with the headline number likely to feed optimism that inflation has actually peaked. Plus, slimming down, Goldman and HSBC plan staff cuts amid economic uncertainty. UBS boosts its dividend and buyback. Now, first of all, good morning, everyone. Let's check on the markets. Of course, it's all about that CPI print in the U.S. John Arthur is writing a beautiful piece today saying, look, even if we have CPI peaking, even if we are expecting a bit of a lower CPI print than we had in the 3 months before or the month before, the concern is that markets are not pricing in how aggressive the Fed need to be still with hikes if they want to get that 2% level under control. Euro dollar 101.45. Yesterday was a big day for euro strength, or certainly not weakness that we saw in the last couple of weeks. US 10-year yield 3.321, and we have Bitcoin, but we'll probably change that to something else like sterling. We also had that UK employment figure in the UK. Not all good news. It's lower than expected, but this is because a lot of people actually also fell out of the workforce. So let's look at the map to see the difference, for example, between the FTSE and what we're seeing elsewhere in Europe. The FTSE gaining 1% or 0.1%, 0.1%. The CAC 40, 0.6% higher. So US CPI data for August out later today. The headline figure expected to have cooled to 8.1% year on year. It's a last big dose of economic data before the Fed meets to decide on further rate hikes. Well, Treasury Secretary Janet Yellen spoke about the issue yesterday.
The Fed is going to need great skill and also some good luck to achieve what we sometimes call a soft landing. My hope is that we will achieve a soft landing, but Americans know that it's essential to bring inflation down. And over the longer run, we can't have a strong labor market without inflation under control.
To talk about the markets and inflation, we're joined now by Karim Shadid. He's head of investment strategy for iShares EMEA at BlackRock. Karim, as always, thank you so much for joining us. Okay, inflation. We're expecting it to peak, but even if it peaks, does the market need to correct because hikes are going to be more aggressive?
Yeah, I think so. I mean, even if it peaks, when we look at the breakdown of the number that's likely to come through today, we have some signs of easing at the headline because of the fall in energy prices from the highs, and some signs of easing in manufacturing, because we've seen, supply disruptions have been improving, but the services sector still has pressure. When you look at shelter costs, for example, still a lot of pressure there, still broad-based. So I wouldn't, even if we have a drop at the headline and some parts of inflation today, I wouldn't call it really over for the hawkish rhetoric, and the market isn't really priced for that.
This is a concern. So our Valerie Teitel put some great graphics together, and I'm looking for the numbers because they kind of really cement some of the anxiousness that the market is looking at. First of all, CPI month on month. But then if you look at, for example, some of the U.S. inflation, and we're looking at the New York Fed survey, it really shows substantial declines in inflation expectations. Yep. So there's a concern that the market is not pricing in what the Fed needs to do to get to 2%, or that they're overly optimistic about these inflation figures.
Absolutely. And when you look at the real yield, I mean, it's gone up quite significantly. So inflation expectations have come back down. And we see this as an entry point to go back into exposures like TIPS, inflation-linked bonds, because the market has gone a bit too far.
Okay, so when do you expect that? Is it a correction that we're expecting, or when do they realize?
Well, I mean, they'll realize when, obviously now we're in the blackout period. We have the meeting on September 21, which will be an important flashpoint. They'll realize maybe more gradually. So I think there will be some, I don't think it will be an abrupt correction, but rather there will be gradual repricing, which we should position for.
All right, let's look at the two-year break-evens approaching the Fed's 2% objective. So that's another great chart that our Valerie put together. 10-year hits a 4-week low. There's a conviction on the markets that actually the Fed has this, that they can manage this. Are they wrong?
Well, I mean, the Fed is being very clear that at the moment they are focusing on bringing inflation down and powering ahead with the rate hikes. As we look to 2023, we do see them powering ahead and not pivoting yet. I think they will need to see more demand destruction. We'll need to see more signs of recession before the Fed gets anywhere nearer to a pivot. So there is an element of, you know, long-term expectations and midterm expectations coming down because of fears of a recession. So the market is adjusting to that. But for now, you know, the Fed is staying with the hawkish rhetoric and not pivoting.
So, Karim, what kind? Are you expecting a shallow recession, or is there a danger that as we try and manage this recession, it becomes quite ugly, or there's a snowball effect, and actually we'll see a huge correction also in stocks?
I would say more of a shallow recession. So we do see the Fed at some point, once seeing signs of demand destruction and recession, we do see them pivoting at some point next year. It's just that the pivot is not as early as the market is pricing at the moment. I would say more of a shallow recession. In Europe, it's probably more protracted. Yeah. In Europe, we could have already entered it because of the food and energy shock. We're looking at more of a multi-quarter recession in Europe, maybe even up to 6 quarters. So definitely more protracted picture. But in the US, more shallow.
Thank you so much, Karim Shadid there, from BlackRock, stays with us. We're also getting some breaking news out of the German Chancellor. He's Olaf Scholz, saying the power price cap will be implemented with great speed. So we'll talk a lot more about energy prices shortly. Also coming up, Beijing looks to boost consumer activity to help compensate for the dwindling tourism revenue and economic slowdown. More on this after the break. This is Bloomberg.
บริการออกแบบและติดตั้งวิดีโอคอนเฟอเรนซ์โดยผู้เชี่ยวชาญ Smart Solution Computer
I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
When U.S. inflation numbers are released,
a major drop in the headline number.
Bloomberg brings you crucial data at terminal speed.
Yields dramatically lower, futures dramatically higher.
A strong rally. Bam, people are going full risk on.
And instant expert analysis.
At what point does the Fed signal we're done?
The market's not believing that the Fed has yet done enough. One report is not all it's going to take.
When do we get back to boring inflation?
Nobody covers the economy like Bloomberg, your global business authority.
economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now over to China, where the Premier, Li Keqiang, has called for more policies to drive up consumption in the economy. The latest figures really show a further plunge in travel and spending over a 3-day public holiday amid tight COVID controls. Now for more on all of this, we're joined by our Chief Asia Economics Correspondent. He's Enda Kern. Enda, thank you so much, as always, for joining us. So what's the latest read on China's economy?
Well, we had a pretty soft read, as you say, on the all-important tourism data over the Mid-Autumn Festival. Francine, the read was about just over 20% down compared to a year ago, and well down on pre-pandemic levels, just speaking to the idea of restrictions and lack of mobility around people travelling around in what would normally be a fairly busy bumper time for consumer spending. But then we had the readout from the State Council, like I mentioned, Premier Li Keqiang talking about the need to boost consumption and boost demand in the economy. There was some discussion of speeding up spending on infrastructure projects in that. Now, economists were fairly subdued in their reaction. They didn't think there was much new by way of a new signal from the government or new policies announced by the government, but it does speak to the idea that the authorities are trying to roll out whatever measures they can to at least put a floor under things.
So, Enda, do we know if the economy has bottomed at this point?
Well, on Friday, we're going to get a big read on where the economy is at, Francine. We'll get industrial production, we'll get fixed asset investment, and we'll get retail sales. It's expected to be something of a mixed bag. There may be a pickup in retail sales, industrial production flatlining, but all of the kind of consistent data on China's economy continue to be negative. We know inflation is very weak, reflecting very weak demand. We know that exports are now...
So, Enda, thank you so much, as always, for all of the insight. I know we'll get back to you and also talk about renminbi shortly. Enda Kern, their Chief Asia Economics Correspondent, with the very latest on China. We're back with Kareem Shadid from BlackRock. Kareem, I don't know how you play China or whether really there's going to be a change, not in leadership, of course, but in policies after, the big political gathering into the new year.
I mean, how we look at China really is a source of diversification. Everything we just heard from Enda, you can tell that China is in a different cycle than in DM economies. So the cycles have somewhat desynchronized, and that's both at the level of the economic cycle as well as the central bank cycle. You know, the PBOC is in a very different place to the Fed and the ECB and all the other hawkish central banks. So desynchronization is the name of the game, which means that the drivers of asset prices in China are different at the moment.
So does it mean that it could be a bargain actually swooping up? And I don't even know how you play it. Is it only currency?
No, I'm also looking at the assets. If you look at China equities, for example, they have been very lowly correlated with DM equities in the past couple of quarters. You know, when you had the rally in stocks over the summer in DM, China was underperforming. When you had the sell-off in Q2, China was outperforming. This is what I mean by diversification. Okay. It goes in the other direction. And then with China bonds, I mean, obviously they now trade at a premium to US government bonds, and that has ramifications on how you seek China bonds for income, but they've also been a diversifier in that the correlation is low.
Yeah, I guess one of the assets of concern is regulatory concerns, right, which was really the story in China over the last 2 years. Mm-hmm. How do you get around that?
So on the equity side, I think we've seen some peak regulation in tech. So we've kind of gone down from the peak here, and then in other parts of the economy, of course, it is a risk. So this is a risk premium that investors attach to owning these assets.
Kareem, talk to me a little bit about Europe. So we just had Olaf Scholz saying, look, we have to have great speed in putting these price caps. Yeah. How difficult will the winter months be? We're also starting to hear stories, for example, in the UK of a school having to close down at 1 p.m. because of the cost of energy.
Yes. So Europe is a really mixed bag at the moment. On the one hand, in the near term, we're seeing some positive sentiment coming through in equities. I mean, in September alone, stocks are up 4%. And I think a lot of it has to do with how extreme the short positioning has gotten in European equities, across institutional and hedge fund money. Very, very big outflows we saw over the past 8 weeks. So it's getting to points where some are looking to dip their toes back in. But on the other hand, as you say, the winter is going to be tough. We still don't know how the rationing is going to look like around around energy. The price caps should help, but at the same time, you might be getting a bit more core inflation with more price caps, which means that the hawkish rhetoric from central banks remains. So headwinds still.
So again, how do you play that, and what does it mean for? Is it through currency or stock, or actually do you get into fixed income?
I think it's through fixed income. So looking at Europe investment grade credit, those spreads we think are compensating us better than the valuations in equities are. So from a cross-asset perspective, definitely prefer IG credit in Europe. And then in stocks, going granular. So looking at sectors like banks. Banks are starting to look interesting because their valuations are so cheap, and from a net interest margin perspective, they have some tailwinds as the ECB rates go up. So going granular is the way to go.
Italy? I mean, to Italy or not to Italy? We covered, of course, the stepping down of Mario Draghi as this big market event.
Yes.
We go into the election about 10 days, and frankly, the market are completely ignoring this.
Yeah, they are. I mean, there is still some risk. I think it's interesting to see how stable spreads have been in Italy, in Italian bonds after the significant underperformance earlier this year. It's probably not as much of a market risk event as was expected by markets a couple of months back, but I think it's hard to call it as the re-entry point.
So what is the re-entry point?
So I think for Italy, it would be more, once we've passed the election, and obviously we have more tools from the ECB now around spread containment, which do have a pretty high bar to clear to be used. So for Italy, I don't think it's now. I think it's more in 2023 once we have a bit more clarity about European risks. But for other parts of the European market, like banks, we do see the re-entry as now.
Karim, thank you so much for all of the insight. Karim Shadid, their head of investment strategy for iShares EMEA at BlackRock. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The EU is set to propose a mandatory target to cut power use. The move is a step towards rationing energy to help homes and businesses across the continent survive an energy crunch. Other measures include funneling energy company profits to struggling consumers. The EU's executive arm will propose its package this week, though deep divisions do remain among its member states. Now, Ukraine is seeking more weapons along with continued US support to build on successes in retaking territory from Russia in the Kharkiv region. A senior Ukrainian official told Bloomberg the armed forces also need armored vehicles and tanks to secure victory over Moscow.
We need more weaponry. We need more artillery. Artillery matters when starting those kind of campaigns. We need ammunition, necessary ammunition for the Western artillery and for the old Soviet artillery. We need armored vehicles and tanks because you see how important to have enough armored vehicles and tanks to carry the manpower. So definitely we need more and more weapons from our Western allies to get our victory as soon as possible.
And hundreds of New York Times staff are working from home this week in defiance of the company's renewed return to office push. More than 1,200 people have pledged not to return to the office in an effort to get the paper to negotiate over its plans. Journalists are also saying many staff have not had a pay rise for 2 years, and that's despite soaring inflation. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Coming up, the UK remains in mourning. Thousands of people have queued to pay their respects to the Queen. But while politics is on standby, the economy is not. So we'll have plenty more on that next. And this is Bloomberg.
Wall Street prepares for the latest read on inflation.
Things are moving. The news flow is extraordinary.
Will headline inflation continue to ease?
The totality of the data has been better than expected.
Very positive movement on inflation.
Instant reaction on Bloomberg surveillance.
This is a new era, and it is one of the most pressing concerns facing us.
And what it means for the Fed.
This inflation fever is breaking and economies keep softening.
They are on track, perhaps, for that soft landing.
Inflation in focus today on Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
You will shed light on dark matter. You will make aging optional. You will turn 5G up to 11. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
Are going to determine these policies. I think workers will, because all of us CEOs, I think, want the best talent. And I think flexibility is going to be the second most important benefit after compensation. All of this, David, has culminated in Airbnb not just being a company about traveling, but now a company about living. So there's this whole new category of travel that's not classic 2-3 nights in a city. It's not long-term housing, and it's completely emerged because of the pandemic.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders.
Watch Wednesdays on Bloomberg Television.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the UK remains in a period of mourning. Thousands have queued overnight to pay their respects to the Queen, whose coffin is at St Giles's Cathedral in Edinburgh. Now, while government business is on hold, the economic news continues. Data released this week paints a clear picture of how well the nation has fared amid sky-high inflation and rising rates. Now, for more on all of this, we're joined by Bloomberg's Lizzie Burden. So, Lizzie, first of all, when you look at the royals and the monarchy, of course, we're still in this period of mourning until the Queen's funeral on Monday. What can we expect today?
Well, King Charles is in Northern Ireland with the Queen Consort Camilla. He'll be in Stormont to receive messages of condolence at the Northern Ireland Assembly on behalf of the Northern Irish people. There'll also be another church service later today. It's all part of Operation Springtide, King Charles visiting all the regions of the UK. And we've had some clarification. Liz Truss is not accompanying him on a tour of the UK, as was previously reported. Actually, she happens to be at the same church services. I think officials didn't want this to be politicised. And later today, as you say, the Queen's casket will be flown to London and she'll lie in state in Westminster Hall from tomorrow, which is really symbolic given that that is the same place Charles was yesterday, devoting himself to the precious principles of constitutional government. And it was really a symbolic moment, wasn't it? Because he said he felt the weight of history because that was the same place where his namesake, Charles I, was tried for treason and sentenced to death in 1649.
I imagine, just like King Charles III has to break away from the shower with his mother, so does Liz Truss have to do the same. What can you tell us about the economy?
Well, we've had more data on the jobs market this morning. The unemployment rate at its lowest since 1974, which shows really the tightness in the labour market isn't going away. It was driven by 194,000 people dropping out of the workforce. And this figure is something that governments like to boast about. Remember Boris Johnson on the steps of Downing Street when he gave his farewell, saying unemployment was at its lowest since he was on a space hopper. But actually, in reality, what this means is it's hard for firms to get workers. It's driving upward pressure on wages, even though workers aren't feeling the benefits of that because inflation's swallowing the wage growth.
And at the same time, we know that the dockers at Felixstowe did not get enough of a pay rise, so they're going on strike strike again.
Yeah, I had been at Felixstowe the last strike, and yes, they're going to do it again. But what's worrying is it looks like the dates will overlap with the strike at Liverpool. Felixstowe, of course, the biggest container port, focuses on Asia. Liverpool focusing on transatlantic trade. Couldn't be a worse time because retailers are gearing up for Christmas.
Lizzie, thanks so much. Our Lizzie Burnham there on the monarchy and the UK economy. Now, coming up, Ukraine vows to reclaim all occupied land as it works to build on its rapid advances in Kharkiv. We hear from a senior advisor to President Zelensky. That's coming up next. This is Bloomberg.
ฟ้าสมาร์ทบอร์ด SCG เหนียวจริงยิงไม่แตกแบรนด์อันดับหนึ่งของไทย
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
The difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
Down, the EU moves closer to power rationing and is set to propose a levy on energy company profits. Prices down, stocks extend gains leading into today's US CPI print with the headline number likely to feed optimism that inflation has peaked. Plus, slimming down, Goldman and HSBC plan staff cuts amid economic uncertainty. UBS boosts its dividend and buyback. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Ukraine is appealing for more Western weapons to build on its successes over the weekend in liberating territory from Russian control in the Kharkiv region. Bloomberg's Maria Tadeo spoke to a senior advisor to the Ukrainian president.
The aim of the Ukrainian armed forces, the aim of Ukrainian president is to liberate all the territory Ukraine is now is not having the control of. And in order to do this utmost task for us, in order to get the victory, definitely we need more weaponry, we need more artillery. Artillery matters when starting those kind of campaigns. We need ammunition, necessary ammunition for the Western artillery and for the old Soviet artillery.
Ukraine says hopefully this year can be put to an end to the war. But I wonder, there was a theory for a long time that weapons meant escalation, and that was a bad idea, and that would only anger Vladimir Putin, and that would only be a problem. Would you say that at this stage, everyone who said Ukraine cannot fight back, weapons means escalation, they've been proven wrong?
Absolutely, they were fully and totally mistaken. Yes, we heard some positions even before the war. Let's not provoke the Russian Federation. Let's tame the beast. Let's be very cautious. Look what happened. Russia still started its aggression against Ukraine, and the steel weapon started to go on. But imagine if we had it before, maybe Russia would have thought twice. So now they are totally wrong, and they see. I think they understand they are totally wrong. They understand the wrongness of their position when saying Ukrainian armed forces will not be able to master this weapon.
Bloomberg's Maria Tadeo, they're speaking to the advisor to the Ukrainian president. We're joined by Maria now. So Maria, it was a comprehensive interview. I urge everyone to go on our website and also listen to it. Did he give any more insight into how Ukraine plans to build on the recent successes on the battlefields?
Yes, and Francine, there's a lot of secrecy now, as you can expect, from Ukrainian officials in terms of where they go and where the army moves. They feel a lot of the success they had is because they moved in small units, that actually caught the Russians by surprise. But I think the takeaway message now from Ukraine, and expect to hear this a lot from the Ukrainian administration, is that this is an army that is professionally trained, that knows how to operate NATO weapons, and the key to ending the war will be more supplies. This is something they will continue to repeat on and on and on and on. Yesterday, Ihor Shofko, who advises President Zelensky, said it is time the West changes their mindset. Weapons do not mean escalation. It's the only way that we'll be able to force Vladimir Putin to the negotiating table. Only when you push him on the military front, you're going to get a diplomatic solution out of this.
Maria, you also asked him about the situation regarding the threats hanging over Ukraine's massive nuclear plants.
And Francine, this goes back to Zaporizhzhia. The situation there is almost, I guess we can agree, surreal but incredibly scary, but also very dangerous. What you have here is a plant that is operated by Ukrainian staff, but is controlled and has been for weeks by the Russian army. The Russian army says the Ukrainians continue to shell the plant. The Ukrainians say it is the Russians. There is very little communication between the two sides. We have seen that over the phone, President Zelensky is talking to President Macron. Macron then goes back to Putin. The Russians, the Ukrainians do not talk directly, and the idea is to demilitarize the plant, but so far that's not been the case. The Atomic Agency says the situation is now reckless. Everyone should calm down, remove their weapons, and stabilize the situation.
Maria, thanks so much. Our Maria today there with the very latest on Ukraine. And we're also joined by Domitila Sagramoso, Senior Lecturer in Security and Development at King's College, London. Professor, thank you for joining us. When you look at some of the concerns surrounding, of course, this long-lasting war in Ukraine, we're at, I think, day 200, and there were significant, impressive moves, actually, from the Ukrainian army on Russia over the weekend. What does this mean longer term?
Well, I think this was so significant that we are really now starting to think that many other sort of Russian fronts could collapse. I mean, it is really quite interesting that there was talk that some units were surrendering on the Kherson front, which is on the south, not far from Crimea. And that would be particularly significant because it would allow Ukraine potentially to be able to hit targets in Crimea. There is also talk that Ukraine could advance advance in areas that would lead to Mariupol and liberate that area, and maybe sort of through a pincer movement also challenge the Russian military presence in Crimea. There's been also advances on the Kharkiv front. So it's a very significant moment. I think what is really important for the Ukrainians now is what we call sort of consolidating their positions. So making sure they have the necessary sort of defensive capabilities and defensive positions so that they're not sort of overrun by the Russians again. I think it is the Russians are, excuse me, yes.
No, Domitila, is there a concern that actually because of the advances, the West now thinks, that this will go their way, and actually we don't know how Vladimir Putin will react to it?
There is a problem. I mean, the Russians are facing problems, as we know, with equipment, materiel, and so they tend to, and also with manpower. That's one of their biggest problems because they're not calling for full mobilization, and they do not have really the means to develop an effective army in the short term to replace the losses. So there is a lot of concern that Putin will sort of rely on sort of indiscriminate attacks and hitting infrastructure, as happened on Sunday evening when they hit a thermal power plant not far from Kharkiv, and that left many areas sort of in a power blackout. So there is concern that Russia might carry out this kind of indiscriminate attacks. There's always a question whether Russia would escalate to the use of nuclear weapons. I mean, we never know, but I personally think that that is quite unlikely because the Russians understand that, they would face retaliation from the Western side, and that would make it very hard for NATO countries not to intervene in some way. So I think there is a sort of red line. So Putin is in a very difficult position at the moment.
So, Domitila, how do you see this ending? Do you see this actually, staying as a protracted war, or could this end quicker?
I think that if the Ukrainians get the right weaponry and the right support, I mean, they could continue advancing, and we could see the Russians really suing for negotiations. And I think that is really what they're probably looking at the moment, that there is some kind of negotiations that fixes the lines that they have now. There is still a lot of territory that is under Russian control. I mean, we got really excited and we thought this was going to be sort of the end of the Russian occupation. But I think we have to be also very cautious because there's quite a lot of territory that is still under Russian occupation. So what I would expect from the Russians is if they cannot muster significant forces to sort of overturn the Ukrainian gains and then move further in areas like the Donbass and properly protect Crimea, that they would try in some way to find a negotiated solution. I think that is probably, we might not hear about it sort of openly, but I think it's already happening. I think there are sort of hints that, there are possibility that some kind of negotiation could end that. The problem that the Russians face and the Putin faces is that there is strong opposition from sort of the more nationalist quarters to call full mobilization, to carry out really war in all fronts, even against the West. And that is dangerous because this pressure on Putin is quite strong at the moment.
Domitila, is there a danger that actually as we get into the winter months, and I mean this is a danger, but is it a real danger that because the cost of living crisis will get harder, because the gas prices will go much higher, that actually there's going to be the West and especially certain countries in Europe that will turn against spending more money and sending more weapons to Ukraine?
Yes, I think that the real concern, as was mentioned earlier, is, of course, the question of energy and the supply of energy from Russia to Europe, gas in particular. I think that is a weapon that Putin uses quite effectively. He's done that in the past towards countries such as Ukraine, Armenia, Belarus. So he uses this as an instrument of policy. He wants to achieve results by sort of putting pressure on the energy front. And I think that is what he's going to use to reduce the possibility of the delivery of weapons from European countries. But I think there are those like the Polish, the Balts, the Danes, the British, the Americans who are not going to stop with the delivery of weapons. And I think that the situation is such that we are understanding that there is a possibility that Ukraine sort of wins on the ground and on the terrain. Yeah. That is why these changes and this sort of Ukrainian advances are so relevant, because they show show that there is a possibility of a turning point, and that it's not, this weaponry that we are delivering is not sort of useless. It's not sort of just keeping the lines. It's also helping with a counter-offensive. And I think that is why this is so significant.
Domitila, thank you so much for the terrific briefing. Domitila Sagramoso, their Senior Lecturer in Security and Development at King's College London. Coming up, Wall Street looks to be embarking on job cuts in order to meet cost targets. More on that story next, and this is Bloomberg.
Fast Smart Board SCG เหนียวจริงยิงไม่แตกแบรนด์อันดับ1ของไทย
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Is it possible the industry is in an arms race that will lead to spending itself into an oversupply? I mean, that has happened before.
We've looked at this very carefully, and the digitization of everything. Tell me what aspect of your life, Emily, isn't becoming more digital?
Well, I'm trying to prevent that, but yes, I think it's happening.
And COVID has accelerated that. The industry crossed $500 billion last year, the semiconductor industry overall, and estimates are $1 trillion, a doubling by the end of the decade at that point. I believe those estimates. It's not that there's not going to be some blips and turns on the way, and the majority of that is driven by leadership process technology, of which only 3 companies can satisfy that need.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Shares in Australia's Ramsay Healthcare have tumbled by the most on record after a consortium led by KKR indicated it won't improve the terms of its takeover proposal. KKR has been in talks with Ramsay, which operates a network of private hospitals across Australia and Europe since April. Now, Twitter has rejected a third attempt by Elon Musk to cancel his agreement to buy the social network a day before shareholders voted on the $44 billion deal. According to the filing, Twitter says Musk's latest move is invalid and wrongful. The billionaire says the company's treatment of a whistleblower gave him another reason to walk away from the deal. And Wall Street banks have kicked off the second part of a $15 billion debt package for the buyout of Citrix Systems. Bloomberg has learned that a group of lenders led by Credit Suisse will hold an investor call later today for a $4 billion secured bond offering. The financing is widely seen as a bellwether for high-yield markets. Hundreds of New York Times employees are working from home this week in defiance of the company's return-to-office push. More than 1,200 unionized employees pledged not to return to the office. They're trying to get the Times to negotiate over in-person work mandates and to agree a new contract. The Times says it has offered a new wage proposal. Deloitte is forecasting that the US retailers will see slower sales growth this holiday season because of inflation. The consulting firm expected a 4 to 6% increase in holiday sales. Higher prices are expected to drive more consumers online to search for deals. And that's your Bloomberg Business Flash. Francine.
I mean, I love it when Christmas is so close that we're still like 8 months away, but people start talking about it. It's almost as good as Halloween.
And I haven't even started my Christmas shopping, Francine, and that's just the extra stress of it. But I have seen that some of the shops here in the UK are already stocking Christmas biscuits and chocolates. So there we are. We're not far away now.
I feel like I contributed actually to the trade concerns, and because I hogged and I bought Christmas presents so much in advance, Leanne, that this time, for the good of the economy, I will not do that. Now,
oh, the problem, Francine, you buy them in advance and you forget you bought them, and then you buy more and then you find them, and it all gets very complicated. Last-minute shopping.
Yeah, lists is what I do. No, thank you so much, Leanne Gerrans. Now, soaring inflation and a slump in investment banking revenue are forcing banks to tighten their belts. Well, Goldman Sachs is about to embark on its biggest round of job cuts since the start of the pandemic. Now, HSBC's CFO says the bank is eyeing what he calls brutal cuts. For more on this, we're joined by Bloomberg's Tom Metcalf. So, Tom, thank you so much for joining us. First of all, run us through exactly the pressures that HSBC and Goldman's are facing.
Yeah, it's two probably slightly different things. So I think at HSBC, inflation really is front and centre. So you had the CFO yesterday saying, look, we're struggling to meet our cost-cutting targets because of this unexpected surge in inflation. So it's a really fascinating dynamic there, because obviously they're trying to increase the wages of their bankers to keep up with inflation. At the same time, they're going to be needing to cut in costs, including presumably jobs, to keep it within their target. So very tricky environment they're in. And obviously Goldman, that's affected Goldman as well. But I'd probably say their job cuts, which were sort of reported yesterday, are probably more likely to be driven by this big fall in investment banking revenue this year.
So what does it mean? They're cutting jobs but paying the people they need more, and are we going to see more banks do the same?
Yeah, I think, for HSBC, it's kind of that tightrope act of, hey, we need to raise people's wages. Yep. That hurts our costs. So as a result, we need to actually cut our headcount, perhaps, of employees we feel we need less. So, and I think you'll see that across all the banks, really. Anyone employing thousands of people. We've seen the UK banks come out with sort of temporary increases in their wages, and maybe those will stick if inflation proves more than transient.
Tom, what can you tell us about UBS?
Yeah, interesting story today. They are upping the dividend they're planning to pay back to investors. Basically, that comes from that Wealthfront acquisition. There's a $1.4 billion deal. They actually scrapped it because of the volatile markets. And now they're saying, to shareholders, hey, we're going to use that money we were going to spend there and we'll return it to you.
Tom, overall, I mean, I know we're going into the winter. This is a lot of energy costs. Like, what will your reporting team be focusing on over the next couple of months? Is it really bonuses and job cuts?
No, it sounds funny, but I think it'll actually be how energy is affecting finance and the banks. So, will they have sort of the resilience of the balance sheets to sort of presumably be able to deal with those kind of wave defaults linked to energy prices? Of course, the governments might step in and try and prevent that, but that's probably the biggest worry right now. Strip out energy out of inflation, it becomes a bit more reasonable, but that whole thing's obviously, hostage to kind of geopolitical concerns. So it's going to be a very interesting 6 months.
Yeah, tough 6 months. Diplomatically, you say interesting. Tom, thank you so much. Tom Metcalf there, of course, who's in charge of our banking coverage. Coming up, chip maker Micron plans massive investment increases just as the White House looks to boost the sector. We hear from the Micron chief executive next, and this is Bloomberg.
Wall Street prepares for the latest read on inflation.
Things are moving. The news flow is extraordinary.
Will headline inflation continue to ease?
The totality of the data has been better than expected.
Very positive movement on inflation.
Instant reaction on Bloomberg surveillance.
This is a new era, and it is one of the most pressing concerns facing us.
And what it means for the Fed.
This inflation fever is breaking, and economies keep softening.
They are on track, perhaps, for that soft landing.
Inflation in focus today on Bloomberg.
We live in a world obsessed with numbers. At Apollo, we intend to make them real every day by investing in real businesses that make real products and create real jobs for people around the world.
ฟ้าสมาร์ทบอร์ด SCG เหนียวจริงยิงไม่แตกแบรนด์อันดับหนึ่งของไทย
Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
And do by machine what should be done by hand.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in the monsoon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
We announced $15 billion through the end of this decade that we'll be investing in building a new fab here in Boise. And we have been our research and development technology leader from Boise for decades. And now, being able to combine it with leading-edge memory manufacturing technology, this will just accelerate time to market of new technologies, new solutions for the benefit of the customers, as well as, of course, driving U.S. leadership in semiconductor technology. So this is a big day. This is a big announcement, and this is enabled by CHIPS Act, which was just signed by President Biden a month ago, because that is really important in terms of leveling the playing field. So this is very exciting. It will bring 17,000 jobs here in Idaho over the course of the rest of the decade. We will be starting production sometime in 2025. Of course, construction to start sometime in 2023. And this will be transformative. And we'll be bringing on production, of course, in line with the industry's demand.
Now, Micron, of course, already has many plants across Asia. How does this impact operations globally? Does this mean you'll always consider building in the U.S. first?
Of course, we have, as you noted, well-diversified footprint across Asia for our manufacturing. And again, CHIPS Act now enables a leveling the playing field, whereby now the production can become cost-effective with the support of grants from CHIPS and investment tax credits. So, of course, we will continue to invest in our plants in Asia as well. But when we look at the demand for memory, by 2030 timeframe, semiconductor memory demand is expected to double in terms of revenue opportunity. That requires new wafer capacity. That's why we started this plant here, announced this plant here, and actually had the ceremony that launches the construction for this plant. And this will basically enable us. This will basically enable us to meet the growing demand for the 2030 era for semiconductor memory technology. Of course, we'll keep investing in technology transitions in our overseas plants as well.
Now, you and Micron warned about slowing demand about a month ago, which triggered a broader concern about a slump across the chip industry overall. What can you tell us about demand as you see it now? Is it indeed slowing down? And if so, how much?
This is for the memory industry, for the semiconductor memory industry. This is a challenging environment, primarily driven by inventory adjustments that our customers across various end markets are making. And that's really impacting the industry demand and supply balance. Of course, we have taken actions in this regard in terms of adjusting our supply growth plans for the future. But you know, Emily, very well that in semiconductors, actions taken, it takes a while while before the results are achieved. So it will take us few quarters before I believe industry demand and supply and balance will be restored. But what's important here is what we are announcing today is about the long-term future. The demand drivers for long terms, AI, 5G, autonomous, and of course across data center, industrial, automotive, those demand drivers in terms of consumption of memory requirement for the long term are intact. And that's why to meet that growing demand requirement of the future, investments need to be made now because there's a long lead time to build these fabs, and the production will only start in the second half of this decade, and it will of course be managed in line with the demand projections for the future.
Well, that was Micron Chief Executive Sanjay Mehrotra speaking to Bloomberg Technology's Emily Chang. Well, Bloomberg Surveillance Early Edition continues in the next hour. Kriti Gupta, K-Lines in New York. Tom McKenzie is here in London, and this is Bloomberg.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายกันร้อนดีราคาถูก
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
I think commodities similarly have been thought of as a way to hedge against inflation. There are challenges over the long term. Equities have been a hedge against inflation. We will continue to do what we have done in the past, which is build a diversified portfolio where there are many different opportunities that have the possibility of hedging against inflation, because different types of inflation have to be hedged in different ways. So if it's a very quick increase of inflation as opposed to a slow rise of inflation, is it temporary? Is it a long and a persistent type of inflation? So for us, I never model myself an economist that can predict where inflation is going. And so what I need to do is build a diversified portfolio where there are different options that can fight the different types of inflation, and to pay close attention to it. And you know, fundamentally, it's done through the equity markets.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
2 weeks, we've really seen an influx of risk-on behavior.
It's still very clear that the global economy is in a very weak phase.
The depth of the recession which is looming right now is probably going to end up shallower than what we could have feared.
We're in the camp that inflation is going to decelerate, growth is going to decelerate.
What I think will happen going forward is you're going to have inflation staying stubbornly higher than markets are expecting as growth starts to turn down.
This is Bloomberg Surveillance, Early Edition with Anna Edwards, Matt Miller, and Kayleigh Lines.
It is 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. U.S. inflation probably slowed for a second month in a row, but that's unlikely to keep the Fed from another jumbo interest rate hike next week. A risky pivot for President Biden. He's trying to capitalize on positive economic news by turning it into an election year selling point. Meanwhile, JP Morgan says a soft landing is more likely for the global economy than a recession. And UBS will return excess capital to shareholders after the collapse of the Wealthfront deal. The Swiss bank is raising its dividend and will probably exceed a target for share buybacks. Welcome to Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London, Kayleigh Lines and Kriti Gupta in New York. Anna Edwards and Matt Miller are off today. And Kayleigh, the focus squarely on that CPI print out of the US later.
Absolutely, Tom. About 3.5 hours to go until we get that absolutely crucial data. But of course, traders in Asia overnight had to place bets before we got those key inflation figures. And by and large, Asian stocks did move higher. Modest gains. The MSCI Asia Pacific Index as a whole up a little more than 0.5%. But of course, following on from the gains we saw in the U.S. yesterday. Now, one individual stock, though, that was lower I wanted to point to is Fosun International. This is one of the largest non-state conglomerates in China. And Chinese authorities have asked state banks and other state-controlled enterprises to check their financial exposure to the company. So that took the stock lower by around 4% when all was said and done, though it was down more than 7% at one point in the session. In terms of other assets related to China, you had the PBOC setting a stronger than expected reference rate for the Chinese yuan again for the 14th day in a row. And yet, once again, the Chinese yuan weaker against the U.S. dollar this morning by about 0.25%. We're trading right around 6.93, so still just shy of that really important, at least in people's imagination, 7 handle on dollar yuan. But broadly, it is a stronger or a weaker dollar story today. Stronger is everything else, including the Japanese yen, stronger by about 0.4%. Right now, crude trading right around 142.25.
Yeah, Kayleigh, that weaker dollar story, well, perhaps giving a little bit of a lift to futures here. S&P futures for our radio audience up about 0.4% this morning. A little bit of risk on sentiment. You can see that cross asset because when you look at the crude futures, you're looking at an 88 handle, which isn't exactly a very high number relative to the volatility we've seen in that market, but it is up 1% this morning. So we'll see, though, if that continues, if you start to see those cross asset momentum really pick up. On the flip side, though, that dollar story, once again, perhaps really a function of what's going on in the yield space. Take a look at what's happening with the 10-year yield, down about 4 basis points in the early session, 331. If you are anticipating a slowdown in inflation, the natural bet here is for yields to come down as well. Let's actually see if that trade holds through. And we also should keep an eye on Bitcoin as well. That's actually where you're seeing a little bit of pain, down to about 0.7%, a real divergence from what you're seeing in the cross-asset picture.
Kriti, here in Europe, you're setting yourselves up, at least if things hold as they are, for a 4-day gains across the European equity markets. Modest gains that you're seeing, for example, here on the FTSE 100, dragged a little bit lower, at least those gains not being propelled because of what's happening in the retail space. And I'll break that story down for you shortly. But you're seeing gains of 0.2%, about 0.1% over in Germany, the DAX. And talking of Germany, just fleshing out the economic story for that country, which of course is so dependent on Russian gas as those flows continue to be reduced. The ZUW Investors Expectations Survey for the month of September coming in at minus 61.9, well below the estimates of minus 59.5. So just further underscoring the pressures, of course, on the Eurozone's largest economy. Across the benchmark then, as I said, gains of around 0.2%. Still the focus here in Europe is on those inflation data points out of the US as well. Euro, on the back of that softness around the dollar, of course, gains of 0.3% for the single currency. The energy energy play and what is happening from policymakers in Brussels as they square up to potentially reducing or capping prices for households and businesses remains in focus. Ocado, one singular individual story to pull out in terms of what's happening here in the UK, and this is the impact on the retail space, really feeling that cost of living crisis, down more than 11%. People are cutting back on their spend. This is a delivery company teamed up with M&S. In terms of what's happening in the banking space, a lot of stories unfolding in the last 24 hours or so. One to focus in on UBS, so stepping up those buybacks in terms of returning cash, of course, to shareholders on the back of that deal that they have not finalised. Wealthfront gaining 1.3% on the back of that news. Kaylee.
All right, Tom, and we will have more on that story in just a moment. First, though, let's get a look at the day ahead on this Tuesday. First, the Queen's coffin will travel by road from St. Giles's Cathedral in Scotland to Edinburgh Airport, where it will then be flown to London. Plus, Twitter is holding a special meeting at 1 p.m. Eastern Time for stockholders to vote on the proposed acquisition of the company by Elon Musk, which, of course, he is trying to get out of. But it is the big event of the day, U.S. CPI data at 8:30 a.m. New York time. And let's get more on this now. What to expect with Michael McKee, our international economics and policy correspondent who is here on set in New York. So, Mike, it's expected to be cooler, but that doesn't mean that it's actually going to be cool.
Yeah, you hit the nail on the head there, Kaylee, because it's not so much what happened in August now that matters. It's what happens going forward. There is a consensus that we are going to see headline inflation drop and drop significantly this month, which would be good news for the economy, but core inflation is going to rise again. Taking a look at some of the components, we can see why this is happening. Food prices have stayed higher. Even though the commodities came down in the month of August, we're still seeing food prices expected to rise. But two of the other categories that we've seen big increases in have started to come down. One is used cars. Remember when used cars were so expensive? Now that's come way down. And of course, the blue is energy. Energy prices, gasoline prices, way off their highs. So that'll drive some of the headline drop this month. Now, going forward, which is what matters, the Fed isn't going to pay a whole lot of attention to this because they've already pretty much locked in 75 basis points, but they do want to know what's going to happen going forward with prices. Is this continuing progress? And the problem is there's a lot of things out there we don't know. We have a railroad strike possibility. Boy, that would cripple supply chains and push prices up. Port strike possibility still out there. And oil and gas prices may rise again. That's the biggest wild card for the economy. And also drought hitting crops worldwide, raising those food prices. So while the Fed is going to do 75 at this point, the numbers today may remind us they still have a lot of work to do.
Bloomberg's Michael McKee, fantastic stuff. Strike action, industrial action, part of the mix there. We're seeing it here in the UK as well as what is potentially going to unfold in the US. Back to what's happening across the banking space and JP Morgan, or at least the economics space. This is the call from JP Morgan and team saying a soft landing is becoming the more likely scenario for the global economy than a recession. Bloomberg's Danny Berger joins us for more. Danny Berger, not a big surprise that we're hearing optimism once again from Kalanovic and team at JPM. They're saying this is risk on. The Fed made a mistake by going as aggressively as they did.
I was going to say, I mean, this isn't a different call at all from Marko Kalanovic, who this entire year has been bullish equities, buying the dip. So this just feeds into that overall argument he has formed this year, saying that, yes, the economy can reach a soft landing, kind of hitting back at those who say, listen to the rhetoric coming from the Fed before we had that blackout period. They were being hawkish, therefore not good for risk assets. Instead, Kalanovic and team write in this note from yesterday, economic data and investor positioning, they are more important factors for risky asset performance than central bank rhetoric. We maintain a pro-risk stance. They go further than that, though, and also say 75 basis points, that is an overreaction because inflation will start to cool, and that means that the Fed will pivot. Yes, folks, we're talking about the Fed pivot yet again, putting in that bullish posturing from JP Morgan. But if you look across to other analysts, this certainly is not consensus. In fact, a form of a recession feels to be more consensus. You can see that in some of the oil calls we've gotten recently. Morgan Stanley and UBS just downgraded their year-end calls. Morgan Stanley downgraded $5 to $95 per barrel for Brent. UBS a downgrade of $15 to $110 a barrel for Brent. Both of them citing recession, not necessarily the U.S., but more global issues, especially when it comes to China and lockdowns there. Both of them do see higher oil above $100 for next year because of the tight market. But Critty, it really just shows you the divergences and nuances of this economic environment we're currently living through.
You know, it's really fascinating. On the one hand, you do have all of these recession fears pressuring the oil market. On the other hand, you have potentially a little bit of optimism that you're seeing, at least with Kolonovich. Bloomberg's Danny Berger, thank you for breaking down both sides of the story. Well, from Wall Street to Washington, President Biden trying to capitalize on a sudden spate of positive economic news. His goal is to turn his party's biggest political liability into an election year selling point. This comes as the Democrats' once unlikely bid to retain control of both houses of Congress has been boosted by falling gas prices and signs that inflation may be easing. Joe Matthew, Bloomberg Washington correspondent, joins us now from D.C. for more. Joe, walk us through it.
Yeah, this messaging from the White House, Creedy, has really been evolving for a couple of months now as President Biden and his economic advisors point to what they call one of the strongest economic rebounds in history. And while they defer to the Fed for all things inflation, they point to two real factors to make the case: the hot job market and, to your point, lower gas prices. The president will make the case for these today and for the billions of dollars being invested in climate and infrastructure when the White House holds a celebration today on the South Lawn for the recently passed Inflation Reduction Act. Now, Republicans, of course, continue to hammer President Biden on inflation, and Democrats at large as we head for the midterms. That part's not going to change. Timing is everything, though. The event will follow this morning's CPI, obviously, and that may or may not bring the good news that the White House is hoping for. Also, as Michael McKee just mentioned, there is a possible looming rail strike at the end of this week. If that were allowed to happen, Creedy, that would create massive supply chain problems and could undo all of the progress that's been made on that front.
Yeah, Bloomberg's Joe Matthew, not necessarily plain sailing, even though the economic picture is looking a little brighter for Biden and team. You can listen to Joe every weekday on his radio program, Sound On. That's at 5 p.m. Eastern Time on Bloomberg Radio, of course. Now, Ukrainian forces have recaptured more than 6,000 square kilometers in the east and south of the country so far this month. Ihor Jovka, advisor to the Ukraine president, spoke to us yesterday.
We need more weaponry. We need more artillery. Artillery matters when starting those kind of campaigns. We need ammunition, necessary ammunition for the Western artillery and for the old Soviet artillery. We need armored vehicles and tanks because you see how important to have enough armored vehicles and tanks to carry the manpower. So definitely we need more and more weapons from our Western allies to get our victory as soon as possible.
OK, that was the advisor to the Ukrainian president speaking to Maria today, who joins us now, our European correspondent, for more on this. Maria, your assessment, having spoken to this key advisor to the Ukrainian president, is there a sense now within the team there, the team in Kyiv, that they can actually win this war?
Well, Tom, wars are unpredictable, but the one thing that has not changed in the eyes of the Ukrainian government from day one is that they can win the war. And I think we need to remind ourselves that for many Ukrainians and this administration led by President Zelensky himself, this is an existential question. They really do believe this is the battle and this is the fight for their lives. And for Ukraine, I hear this repeatedly. This is not just war talk. This is not about hyping up the people. They really believe there is a sense of that going forward. I also think in that interview that I conducted with Ihor Jovka yesterday, he advised Zelensky on diplomatic matters. He also said at this stage, it should be clear now to anyone who doubted us that we have a professionally trained army that has been on high alert ever since Crimea was illegally annexed by Russia. They know how to operate NATO weapons. And he also pushed back on this idea that more weapons means escalation and that could lead to more violence. And the way that the Ukrainians see it, the only way to get Vladimir Putin to engage diplomatically will be to defeat the Russian army on the ground. There is no other way to go about it.
Bloomberg's Maria Tadeo joining us from Brussels. Thank you, as always. Let's talk now about UBS, set to raise its dividend for this year by 10% and saying share buybacks will likely exceed $5 billion in 2022. The Zurich-based lender is returning excess capital to investors following the cancellation of its Wealthfront acquisition. Michael Moore, Bloomberg Finance editor, joins us now for more. Michael, a lot of changes at UBS. Walk us through the details.
Sure. So I think for investors, this kind of cushions the blow of the Wealthfront deal not going through. And you've seen from a number of banks in Europe, despite the economic fears, despite the concerns about a potential recession, they are returning more capital to shareholders. That's something that was put on pause during the pandemic, but there is a lot of appetite to get that capital back to shareholders after years of promising it.
Meanwhile, Michael, Credit Suisse, embattled Swiss lender, of course, is looking to raise money with a bond deal. Is there appetite for that? What are they going to put in that money to play for?
Yeah, so it's not just Credit Suisse, it's a number of lenders but Credit Suisse is leading that effort, and this is part of the leverage buyout loans that we've seen over the last few months really come under pressure. This will be a good indication of the market for that kind of debt and whether banks can get some of this off their balance sheet. They've taken a number of write-downs in that area in the second quarter, but if the market for that comes back a little bit, that could be very bullish for Credit Suisse and the other banks.
All right, Bloomberg's Michael Moore, thank you so much. Let's turn now to another corporate story we're watching this morning. Twitter has rejected a third attempt by Elon Musk to cancel his agreement to buy the social network. According to the filing, Twitter says Musk's latest move is, quote, invalid and wrongful. This comes as Twitter whistleblower Peter Zatko, or Mudge, gets to testify before a Senate panel and Twitter shareholders vote on the $44 billion deal today. So a lot of drama that continues to unfold. As for how that is translating into Twitter shares in pre-market trading this morning, right now they are unchanged, but definitely one to watch. Another one to watch is Peloton. The company's co-founder, John Foley, who had already stepped down as CEO back in February, now also stepping down from his role as executive chairman, so leaving the company entirely. Initially on that news, when it crossed in late afternoon yesterday, the stock rose. This morning in pre-market trading, though, down about 2.25%, so investors don't seem to like the leadership change up too much. Finally, one other stock to watch, Apple, because of course this was one of the big drivers of yesterday's rally here in the U.S. It was up nearly 4% on those stronger than expected pre-order data for the iPhone 14, and those gains are continuing this morning. That stock up about 0.6% before the bell, Tom.
Yeah, customers apparently loving that iPhone 14. They've kept the price as well, Apple, and that boosted the share price. I say thank you. Coming up, of course, investors will be closely eyeing the US inflation print, as we've discussed, for clues on whether the Fed will deliver another jumbo-sized rate hike next week. We will discuss with Ryan Wang, US economist at HSBC, and how inflation is upending politics in the most unequal region on Earth. Read more of today's Big Take story about Latin America on Bloomberg.com or by typing NI Big Take into your terminal. This is Bloomberg.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
The difference between endless research and a winning strategy.
To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta with Kaylee Lyons in New York and Tom McKenzie in London. Anna Edwards and Matt Miller are off. Well, it's CPI day, which means, of course, we have to look at those inflation expectations. Largely baked into the market right now is the expectation that CPI, well, it's peaked. It's in the rearview mirror. Now it's just coming down. The question is how quickly can we get it back to some sort of normalcy? Let's take a look at what the market is pricing in, though. For our radio audience, stick with me here. We're looking at a chart of the Bloomberg Terminal of 3-year inflation expectations and 1-year inflation expectations. And on both, you can see that they have kind of peaked. They're saying that now you are going to start to see this deceleration in CPI. But as Michael McKee pointed out earlier in the show, CPI, headline CPI may be decelerating, but core numbers, that part that the Fed really watches, that might be accelerating a little bit. Let's get some market reaction, or at least the thought process on what the market reaction might look like from our very own Simon White, a Bloomberg macro strategist. He joined us now. Simon, your take.
So I think the inflation worm is turning. You point out the expectations index there. That's clearly falling from the NY Fed, but there's other surveys that are all confirming the same sort of thing. So, you're beginning to see this kind of rolling over in inflation expectations. The Fed also produced a global supply chain index. That's also been rolling over quite significantly. So you're seeing multiple things lining up, suggesting that at this particular stage, we're seeing inflation peak for now.
So bonds looking oversold to you at this point?
They're extremely oversold. I mean, I looked at a chart today. I had to put another line in to show how oversold it was. And I think that's the potential with the traders. You look at 10 years at 330. They've obviously been selling off recently. I don't think the market is particularly ready for a downside surprise to CPI.
Okay, there you go. The trade is at the long end of the bond market. If you start to see, as you say, the worm has turned on inflation. That's the call there from Simon White, of course, our macro strategist. Thank you very much indeed. For more market analysis, of course, check out MLive Go on your terminal. Plenty of great stuff there. Stay with us. This is Bloomberg.
ฟ้าสมาร์ทบอร์ด SCG เหนียวจริงยิงไม่แตกแบรนด์อันดับ1ของไทย
You will put a woman on Mars. You will bring forth global cooling. You will be the first chief crypto officer. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
Bloomberg, your global business authority.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Policy, politics, from the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Kriti Gupta in New York and Tom McKenzie in London. Matt and Anna are out today. Now, keeping you up to date with news from around the world, here's the first word. Goldman Sachs doesn't see China shifting its COVID-0 policy this year. In a report published today, Goldman says that stability will be the prevailing narrative in the lead up to next month's key Communist Party meeting. COVID containment measures, especially around Beijing, have been intensified in recent days. Bloomberg has learned that the Justice Department has subpoenaed dozens of former President Trump's campaign operatives and allies. It's part of an effort to collect information related to the plot to overturn the 2020 presidential election. A lawyer for one of those subpoenaed, former New York Police Commissioner Bernard Kerik, calls it a fishing expedition. And Deloitte is forecasting that U.S. retailers will see slower sales growth this holiday season because of inflation. The consulting firm expected a 4 to 6% increase in holiday sales. Higher prices are expected to drive more consumers online to search for deals. Coming up, we'll continue the conversation on inflation ahead of the critical CPI numbers here in the U.S. coming up in just over 3 hours. Ryan Wang, U.S. economist at HSBC, will give us his thoughts. This is Bloomberg.
Get the power of app analytics and engagement in one single platform.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
Your ability to solve those complex problems are an important element, I think, of the value that we add to the company. And then I think opportunities, you always want to make sure that you've got a creative enough mind, an open enough mind to be able to see around square corners. What am I missing? You know, the why questions are really powerful. Why are we not doing this, or why are we doing this? I ask those questions a lot, and in the answers, you can sometimes tease out some real opportunities, some hidden things. But thinking creatively about opportunities and problems is really important.
And what about the industry generally? Do you think they have big challenges now as the defense budget probably comes down a bit?
So I think that we are all responsible, and we have an obligation to find the latest and best technologies that we can for our customers and deliver them in the most cost-effective manner we can. And I think that that's a challenge and an opportunity for all of the big defense companies.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European